Ladies and gentlemen, Happy New Year's. Thank you for joining me. This is Christopher Aaron. We are coming to you on the eve of New Year's. For some of you, it's already the 1st. And we are bringing to you the action in gold and silver up through Thursday. Next week, we'll be back on the normal schedule of Wednesday and Sunday for these updates. This week is a short trading week, so we're condensing it into this one presentation. So we look every week at gold, silver, the mining complex, the related assets, and we're going to start this week with silver. Now, we know that we've had these lows coming into silver, and let's see how that affected the price action here. We are basically holding the lows that we've had over the last few days. So no new lows on silver. Obviously, it's given back about 50 cents since the last video, but coming right back down to these lows that were hit last week. Let's put this into perspective. We're looking here at the 6-month chart for the SLV fund. And for anyone that's new, just remember I do not recommend owning the SLV fund for the long run. I merely use this to help chart over the short run. So here we are looking at the SLV fund representing the price of silver, and we're showing this back and forth kind of grinding new lows, holding above the lows from a week or two ago, but giving back those gains from the last few days. Let's switch this over and look at the other side of the spectrum, which is the mining complex, and we're looking at Silver Wheaton, the strongest silver miner. We are still seeing that it is holding above these lows. Whereas silver had broken below, Silver Wheaton still holding above. So that's still giving us a signal of some level of outperformance that the silver mining complex is expecting. Now, it looks like this uptrend line here that I was following has been broken. So I've changed the color of that to turquoise. You can see that here. This line was getting weaker over the last couple of weeks and finally broke over the last few days. So what this means now is we are going to be looking for Silver Wheaton to come back down into the range of the lows. And if it can hold there, even as silver is grinding below these lows, we still have a valid outperformance signal. So it doesn't mean that this is the bottom quite yet, but it means that we're getting some indication that there is a trend change to come. Looking at silver over the last 3 years, and you'll see what I mean by this trend change. Here we're looking at 2013, the prices from the start of the year to the end of the year. So January, the first trading day in January, we started at $30.37, and the price closed at $19.55. for a loss of 35% for the year in 2013. What happened in 2014? 1955 down to 1560, a loss of 20%. So still a loss, but a lesser percentage decline. Let's take a look at the final numbers for this year, 2015. 1560 to 1382. A loss of 13%. So again, still a loss. We are still in a downtrend. However, you can see by the numbers the downtrend is lessening. So keep these numbers in mind for the next chart. This is what I referred to from a visual standpoint of those numbers. So the highs are coming down, the lows are still coming down, but every drop for the last few years is a lesser and lesser percentage drop. And you can see this type of pattern generally breaks to the upside. When it breaks, you will generally have a move higher out of this type of pattern. So this is what I'm looking for the low here for silver. And we've been following this for some time. It may be getting boring for some of you who have been watching these videos for a few months, but I really think it's important to keep in mind where we are in this pattern. And if it's getting a little boring, a little grinding, keep in mind that's exactly how bottoms form. They form by wearing people out and really testing your patience around these lows. So especially if this continues, maybe if it drops another 5, 10, or 20 cents every couple months for the next few months, this is really going to be a grind. And that's exactly what usually leads to these long-term bottoms. So let's also keep in mind here that the downtrend of silver versus the CRB commodity index, which is a basket of commodities, has been broken here. So we are no longer moving down relative to other commodities. And typically this signal comes about a year before the final bottom for the actual price of silver itself. When silver stops underperforming and starts outperforming some of the other commodities, we typically see the price start to change in the next year after this signal. So again, we're looking at the 35-year time frame because it's really important to remember, for anyone who's new, to remember how significant this zone is that we're in. This $14, $15, $13 zone corresponds very nicely to the long-term uptrend that has been forming here in silver over the last 10 years. And here we can see again basically a continuous outperformance against a basket of commodities when you're looking at this from a decade perspective. Now look very closely in here. Look at these lows compared to the commodity index. This low in 2005, this low in 2008, and this low in 2014, beginning of 2015. Look at what happened after these lows. So 2005, right here. What happened after this low? We had this significant spike in the price of silver. What happened after the 2008 low? Let's move our mouse right up. That led to this spike in silver over the next few years. So we have formed another low here in the price of silver versus the CRB commodity index. And what I'm showing here is that over the course of the last 10 years, every time silver forms a bottom versus the rest of the commodities, it tends to have a price spike in the subsequent year to 3 years after this low. So this corresponds with what I expect for silver over the course of the next 5 years, which is a rounding, grinding bottom that may take a couple of more years to round out, followed by another price spike toward the later part of this decade that should take us back to the $50 level for another attempt. Silver has not finished attempting to break through this $50 level. So we are biding our time in here before we look for that next attempt several years into the future. Not this year, not next year. Within the next 5 years is my prediction for that move. Turning our attention to the gold market, and again, this sort of weakness coming back down into the lows, but let's look at it from a 6-month time frame, grinding around these lows. Nothing like a new low. It's just grinding. I mean, this has been grinding since the beginning week of November. So it's almost a 2-month grind here below this low. Compare this to the mining complex, in which we can see no new lows in the mining complex for gold, as represented by the GDX fund. So we're still looking at this outperformance here, and we have to continue monitoring this. It's not okay to look at this once and then not check it again for another 3 or 4 months. So the reason I bring this slide up every time And it hasn't changed, yes, over the last 6 weeks, but it's important to keep looking at this, because if this is breaking this downtrend line, if the GDX fund is going to break its downtrend, that's a very significant leading indicator for the price of gold. And of course, silver tends to follow the price of gold. So if you're a silver investor, this is also important for you to be paying attention to. Let's look at gold by the numbers for the last 3 years, given that it's the end of the year. 2013, we started the year at 1676, down 28% to 1204. Last year, 2014, 1204 to 1183. Not really a whole much of a drop, although there was some movement within that zone, some pretty significant fluctuations. Really only a 2% drop for the year. And this year, 1183 to 1060, which represents a 10% drop. So more of a drop this year than last year. So let's look at that on the 2-year time frame, and we can see that. We can see this year from the start of the year to the low, that 10% drop, putting us still well within this downtrend. Now, let's back this up again. I've had a lot of people ask me, okay, so we're still in this well-defined downtrend, and absolutely, I agree with that. So we have to turn to other forms of analysis to try to gauge, is there a potential for a low to form at some point in this downtrend? So we are looking at another chart that I've created, and I've spoken about this a few weeks ago. But for anyone that's new, we have this support zone here of 850 to just above 1,000. That contains 5 very important technical levels that I've been watching for years. And we are just getting back into this level now. For example, this 2008-2010 black horizontal support level. Bring this all the way back to 2008-2009. And remember that in 2009, or if you've just started paying attention to the precious metals recently, this would be before you started to tune in. But in 2009, before gold had ever broken above 1,000, there was a purchase by the Central Bank of India. And they came in and they bought, if my memory serves, I believe it was 400 tons of gold right below this $1,000 level. And that just shot gold like a rocket. I remember watching this in real time, and gold rose by about $100, which was like a 10% move within a week or two. And basically it has never looked back from that point. So when I show this horizontal line here, know that this actually represents something that happened in real life. Okay, the Central Bank of India making a large purchase at this price level. It's not just a random line. So we're showing this here on the chart as our first potential support. So you have to think, if the Central Bank of India back in 2009 stepped in and said, let's buy some gold around $1,000, are they going to sit by if the price goes back to $1,000, or are they going to buy a significant amount again? Or are there other central banks that have been waiting, that did not want to chase the price higher, but that are waiting at this level? So when I say there are potential support levels, that's what I'm talking about. I'm talking about fundamental institutions that have come into the market in the past and bought at specific levels, and we are watching to see, are there large purchases again happening at that level? We have 4 other support levels here coming in the $150 range right below that 1,000 level. So there's a lot going on here in the gold market, leading me to think that there is a long-term bottom that will be forming over the course of this year. I want to look at the gold to silver ratio. I haven't looked at this in some time, so I want to refresh my perspective and everyone out there on what's happening in the value of gold to silver. How many ounces of silver does it take to buy 1 ounce of gold? We are around 76 ounces today, from the low of 30 less than 5 years ago. So a continued outperformance by gold versus silver. Now we've had this grinding, topping looking pattern here, this back and forth, up and down, even while we're still within this blue channel here, okay, blue primary channel. So this looks like a potential top. Could it go a little bit higher? Yes, absolutely. There could be another high to come. But keep in mind this level here as a potential high. It certainly looks like the ratio is struggling here. It certainly is not surging higher at any point in the last year and a half. So we're zooming out now, and let's just update ourselves on the long-term trend for gold to silver. Here was that channel we were looking at, and here's the high that we've been looking at here. And you can see why it's having so much trouble moving higher. This is a generational time frame. You're looking at a generational, 25-year, 30-year, back and forth, up and down, but overall as a trend, a move lower in the gold to silver ratio from the high of roughly 105, which was hit in the 90s. So we're at 76 right now. It's relatively high. Could it go a little bit higher? Yeah. Could it break above this long-term magenta trend line like it did here in 2009? Yes. For a brief moment. Yep, absolutely. But it's my best estimate that we are approaching a top here, and that over the course of the next several years, silver will once again be gaining value relative to gold. I expect that they'll both be moving higher once these lows are put in, but that silver will move higher at a faster rate than gold, reversing what's been going on for the last few years. Again, there's precedent for a 15 or 17 to 1 ratio at the peak of a bull market. This ratio has been hit twice before over the last 100 years. And I believe this ratio will be hit again in the future when this bull market is over. So we're nowhere near the end of this move in the precious metals from a long-term perspective. So we're going to be looking at the British pound now. For anyone who's in Great Britain, welcome. We're doing a different currency every week. There's a lot of people here from the United States, but also a significant number from Britain, Australia, Europe, and then Asia. There's a lot of people tuning in from Asia. So welcome to everyone. We'll just do a different currency every week because this is actually something that helps keep my perspective focused. So here we are first looking at the British pound versus the US dollar. Excuse me, this is the overall title for these slides, but we're looking at the British pound versus the US dollar here as a comparison. And this is kind of a strange looking chart. There's a few things that I want to point your attention to before we look at gold and silver. Basically, you have the British pound back where it was 15, 20 years ago, right around the 147 level versus the US dollar. You had a large rise in the British pound, just like every currency was rising against the dollar up through 2008, through the crash. And then you can see here this trend line, this long-term trend line was broken during the crash. This is why I pay attention to these trend lines so much, because when they break, they tend to lead to significant moves in the opposite direction when there's a legitimate break. And you can see that here, the pound broke down against the dollar and has not even come close to recovering since then. So these long-term trend lines, when they break, are very important. Since then, we've basically just had a grinding, kind of circular sloping move here. You can see by these royal blue lines. Not a whole lot that I can say about the intermediate term direction of the pound, except that it is going to continue to grind for the next couple years until perhaps this trend line is broken. Looking at gold as priced in the British pound. Again, a long-term uptrend that is still in play and that just got hit here at the 700 level. This shows 7.0. These numbers, you need to add a 10 to these for these to be correct. So this 70 is really 700 British pounds for an ounce of gold. And so this long-term trend line is really in play right now. So this bears watching. We are at a very important support level here in British gold. And then we can see since the high in 2011, this downtrend line that's been forming, these two lines will be meeting at some point here in the next year. So this will be an important battle. Certain currencies can give us leading signals as to the US dollar valuation of gold. Certainly the British pound is one that I pay a lot of attention to, as well as the euro and a few other currencies. So we are right here at an important level at 700. Let's zoom this in. And we can see these lows. Now, the important thing to note here at this 700 level, we're looking at the last 5 years of the British pound. The important thing to note here is that compared to the US dollar, British pound gold looks stronger over the last year. So look at this summer low and then this winter low. It has not broken lower. Whereas in US dollars, the price has broken lower here since November. So British pound gold looking stronger, relatively speaking. Certainly we don't have a bottom confirmed yet, but we are noting the relative strength right now. This is that downtrend line that's been forming since 2011. And there will be something very important to watch here when this downtrend line is tested. This could happen at some point this year, based on projections for price movements that have occurred over the past few years. This could happen in the next year. So we'll pay attention to this downtrend line coming in here right around 800 pounds. Turning to silver, British pound silver. Again, a similar situation, a long-term uptrend that is still in play. Very similar to the US dollar, we have this long-term uptrend line. We've had a series, the most recent one being at the early part of this year, of downtrends that have broken here, shown in the turquoise color. And you can see the number of times in orange, 1, 2, 3, 4, a fifth time that the price of silver has tested this long-term uptrend line. So a very significant level that we're at right now. I will continue to update this over the next several months. If we see, do we get a significant bounce off this level? Or do we get a break below it? That'll be something to note as well. Let's zoom this in for the last 5 years. And here we are again looking at this level of roughly 9 British pounds per ounce of silver. Again, looking stronger than the US dollar price of silver. Whereas the US dollar price has been breaking lower over the last several months, you have British pound silver holding up. So there is not weakness across the entire spectrum of gold and silver. It seems to be more of a US dollar related event right now. So we have some clues here. I'll be looking for this downtrend line to break before I'm willing to say that we have a bottom put into place. This support at 9 could fail still. So I'm watching this very closely. The downtrend line, here, coming in right around 10 British pounds. A much more significant resistance level here around 16 to 17. This will take some real buying power to break through this at some point here in the next couple years. So in summary, British pound, gold and silver are looking slightly stronger than US gold and silver. So it's time to give some predictions for 2016. And I don't do this often, but I'm going to give some predictions right now. Just to let everyone here know, I do not sell gold and silver. So I have no interest in being a pumper. I have no interest in trying to tell people to buy now, buy all your silver because you'll never be able to buy, or you'll never be able to buy gold again. That's not where I come from. What do? I provide analysis. And on my website, I have some premium analysis that is available for purchase. And I intend to continue producing these videos for free as long as I possibly can. So that's just a little bit about where I come from. I don't have anything to sell you as far as needing to buy. For me, it would be just as fine if you sell. I'm looking to show people that I have a fairly comprehensive system for analyzing the trends that are taking place in the market, whether they are up or down. I happen to think that we're forming these important lows here. Okay, that said, where are we? End of 2015, going into 2016. Let's look at my predictions. I predict that the final lows will be put into place in 2016. The final lows of these bear markets. Significant lows. That said, this does not mean the price will begin skyrocketing immediately after the lows. I expect a period of bottoming, of grinding, for perhaps a year, perhaps 2 years, perhaps even 3 years before we round out of these bottoms. I do expect that low from a price level to be put in, though, this year. 2017 will be the first year of gains in a long time. It could be a small gain to start. It could be 10%. It could be 15%. It could be more. But I predict after these lows, 2017 will be the first year of gains. Happy New Year to everyone. Thank you for joining me. I hope you will stick with me over the months to come. Have a happy New Year. I will see you on Wednesday.